Welcome back. You're watching Editors Roundtable and we're in conversation with Nimesh Chandan. Nimesh, in our previous conversation, you had spoken about how you're bullish on pharma and healthcare. You saw it as a growth plus a defensive sector. And pharma did well last year. But now there are some concerns about what this Trump tariffs will do. How would you approach pharma and healthcare from here?
I'll just give a quick perspective on Trump tariff and then go specifically into pharmaceutical and healthcare. So somebody should ask ultimately if certain large, quantum of tariffs are put by an administration for imports which are across the board, who actually pays for that tariff? Frankly, if the demand is inelastic and consumers, are passed on this kind of tariff increase, it's actually the US consumer who will pay this tariff, and that will lead to higher inflation for the economy. Second, if an importing corporation, either supply company that is taking certain supplies from India, China, Mexico, Canada, if they are not able to pass on, they'll have to take cut on their own margins. So actually US corporates will pay for it. And those guys who have taken a cut on their margins will not go to further invest in the country or take more labor. They will actually maybe doing some cost cutting. Third is, if this is going to trigger a trade war, you are entering a stagflation kind of scenario where the US economy also will see higher inflation and lower growth because there will be counter tariffs on their corporations from some other country. So actually, there will be some kind of payment done by US consumer or US corporates or US investors on this. So it is not so easy. Selective anti-dumping duties, selective areas where you want to protect jobs, I think those things work rather than a blanket tariff like this. And in healthcare, India is supplying to US in terms of generics, where they are supplying to wholesalers, distributors. If there is a small price increase, India doesn't become uncompetitive, frankly. And this will definitely be passed on to the consumer, this price hikes. Even if insurance companies are paying for these medicines, they will increase the premiums to the consumers. The others are CRAMS companies which are supplying to the innovators. The innovators have huge margins there. They will have to take some cut on their margins. Most of the time, it will again be passed on to the consumer through insurance companies or so in terms of price hikes. So I'm frankly not worried about this. And I'm a little bit surprised. I think there was some overreaction today on this news of taxing pharmaceuticals. If steel and aluminum price hikes can be passed on to the consumer, why would somebody stop taking medicine if there is an increase in tariff there? I frankly don't understand. So I'm quite bullish, continue to be bullish on healthcare. Domestic market is doing extremely well. Even a lot of patents are expiring in the next 5 years. That gives opportunity for Indian generic companies. And CRAMS is an area I'm very bullish on because of Biosecure Act, because of already the pipeline of projects that these CRAMS companies are having. So I continue to maintain my bullishness. I think this fall is a very good opportunity to pick up some of these companies.
Sure. Chandan, the last is on the broader markets. As I highlighted, the indices are down almost 20% from the 52-week highs. For the benefit of the viewers, as a fund manager, how would you screen the broader market stocks? What are the things that you'll be watching out for to buy? And which are the red flags that you'll still avoid in the broader market names?
Good. So let me just break it up into categories, styles, and sectors that we feel bullish about. So in terms of market cap categories, large cap becomes attractive. Actually, I would have expected large caps to outperform much more in this kind of a market. But because of FI selling, they have also fallen quite a bit. Nifty has not done much in the 2 years in terms of gains, and it fell also significantly. So I think large caps as a category, the risk reward is very, very attractive, and you can be there. Now, in terms of quality, in terms of style, we like quality as a style, as a theme. And a lot of good companies with good ROCs, cash flows are available at very good valuations. And I think that should be a style of the year. I think quality should be the style of the year. Third is in terms of sectors, as I said, contrarian bets, BFSI looks very attractive in terms of valuation. Consumer companies also look extremely attractive. And now with these tax benefits, interest rate cuts, and then later on 8th pay commission coming, I think consumer sector will start doing very well in the coming financial year. And the last one, then healthcare, obviously I'm bullish on. I just gave my comments on that. So this is what we look at. Now coming to broad market, mid caps and small caps. They had run up quite a bit in the last 2-3 years. Now there has been a good correction in them. Many of these small cap companies have corrected 20 to 30%. I look at a 20-year kind of valuation gap between large caps and small caps. It had gone up to a good high, and now it is corrected. Now probably I think the gap is about 10% or so left in terms of what average the small cap valuation should be and what they are right now. So again, how do we look at this? Say in a basket of 250 small caps, now about say 75 of them, that is 30%, would definitely look attractive on valuations and growth metrics. And that's a good enough opportunity to start fishing and at least start looking at which are the areas where there has been an overreaction on the downside and start fishing in those areas.
It's well put, Chandan, and I wish we had more time, but we are out of it for now. But thank you very much for joining us here, Nimesh Chandan, with those thoughts and that perspective. I think, guys, it also brings us to a close on this edition of Editors Roundtable.
Thank God it's Friday.
Yeah, well, we can say that for sure, right?
This is a week when everybody feels, thank God it's a Friday.
Okay, well, see you on the other side. News and updates follow. Thank you very much for staying with us.